Everybody, welcome to the core concept lecture. This one will be introducing reversion levels. Firstly, what is a reversion level? A reversion level is simply a level within a TPD that the market will refer back to before an expansion. Reversion levels form in candle 2 of the 3-candle sequence, and reversion levels are used to encapsulate the expansion of candle 3. So looking at the diagram, as you guys already know, this is elementary. You can see we have the 3-candle sequence. We have candle 1, candle 2 being the TPD, and we also have candle 3. But if we take a deeper dive and see what it would look like through the lower time frame perspective, we can see that we have candle 1 right here. So this entire candle, which would be candle 1, think of it on the lower time frame. This is how it would look. And then we have candle 2 right here. So it would be the actual TPD. And then we have candle 3. So this portion of price action would represent candle 1, this would represent candle 2, and this would represent candle 3. So with reversion levels, typically you will see candle 3 drop back inside of the TPD that forms and then expand higher. But where is price really retracing to or referring to before that expansion higher? There's a specific candle within candle 2. If you look at it through the lens of a lower time frame, that candle 3, as soon as it opens up, if you're bullish, it'll drop below there, reprice into that candle, and then create the expansion higher. And now if we look at candle 2 just in and of itself, and we have a real chart example here, preferably you want to see a stop run. So you want to see price trade below an old low if you're bullish, like this example, vice versa if you're bearish, run above an old high. You want to see that take place in candle 2. And this low can be either a part of candle 2 or a part of candle 1, but it adds probability to see a high or low being broken. And then once price breaches that old high or old low, then towards the end of the lifespan of candle 2, you will see a change in the state of delivery. So as you can see right here, this would be the end of candle 2, just viewing it through a lower time frame. This candle closes above this candle's opening price, creating a change in the state of delivery. And now if we look at the whole picture, we can see this would be candle 1, and then price trades down, takes the low of candle 1, and then forms this change in the state of delivery near the ending of candle 2. Candle 3 opens up, refers back to that change in the state of delivery, and then continues higher. So the actual reversion level is typically, if you're bullish, like in this example, the lowest down close candle, that opening price, and the wick. You can use that, highlight that with a box, as you can see right here. Draw that across, and you would want to see candle 3 reprice back inside of that, and then continue higher. Now it is permitted to draw lower, and even on another asset break this low. So it's important that you always choose the strongest asset in the direction you're trading. So if it were a bearish example, then it'd be the highest up close candle, and you see a change in the state of delivery. And then once candle 3 opens up, you'd see price retrace into that highest up close candle and then continue the expansion lower. So once again, to prevent yourself from getting wicked out or getting stopped out, always choose the strongest asset in the direction that you're wanting to trade. All right, reversion level time frame alignment. So if you have a weekly time frame TPD, then you can see a daily reversion level. If you have a daily time frame TPD, then you can see a 4-hour time frame reversion level. If you have a 4-hour TPD, then you can see a 1-hour reversion level. If you have a 1-hour TPD, then you can see a 15-minute reversion level. And if you have a 15-minute TPD, then a 5-minute reversion level. And finally, a 5-minute TPD for a 1-minute reversion level. So yes, this concept is fractal. So as long as you're in tune with narrative, and you see a TPD that correlates with narrative as well as premium and discount, then you can use reversion levels to get alongside a move. All right, order of operations. So coming into a trading day, you're probably wondering, how do I actually use this information and filter out all of the noise? Because there are a lot of TPDs that form, but how do I know which ones to actually pick from? So just like going from a top to bottom or top down analysis, you can do that same thing with reversion levels. So personally, the first thing I look for coming into a trading day is a 4-hour 2 a.m. TPD. If I see a 2 a.m. TPD form, then I'm looking for a 1-hour reversion level, and I'll use that as a key level, and I'll look for price to drop back within there, either at the news release at 8:30 or the 9:30 opening bell, and I'll use that for an entry to get alongside with a move. But if a 2 a.m. TPD does not form, then I'm either looking at a 7 a.m., 8 a.m., 9 a.m., or 10 a.m. TPD to form. And the same thing, I'm looking for that 15-minute reversion level. And at that same time, I'm looking for either 8:30 if it formed at 7 a.m., or I'm looking at 9:30 if it formed at 8 a.m. That's the time that I'm looking for these reversion levels to actually work. But sometimes price doesn't always offer something and make it easy for us. So if either of those don't form, then you can look for 15-minute TPDs from 8:30 to 10 o'clock, and typically you can find a 5-minute reversion level inside of there to get alongside order flow. So hopefully you found this one insightful. I will speak with you all again soon. Good luck and good trading.